Interpreting Credit.com personal loans requires a thorough understanding of the key concepts and terms involved. To start, Credit.com is a platform that provides users with access to a network of lenders offering personal loans. These loans can be used for various purposes such as debt consolidation, home improvement, or major purchases. The first step in interpreting Credit.com personal loans is to understand the loan terms. This includes the loan amount, interest rate, repayment term, and fees. The loan amount is the total amount borrowed, while the interest rate is the percentage of the loan amount charged as interest. The repayment term is the length of time the borrower has to repay the loan. And fees include any additional charges such as origination fees or late payment fees. When reviewing loan offers on Credit.com, it is essential to compare the annual percentage rate, or APR, which takes into account the interest rate and fees. A lower APR indicates a more affordable loan. For example, a loan with a 10% interest rate and a 2% origination fee will have a higher APR than a loan with a 9% interest rate and no origination fee. Another crucial aspect of interpreting Credit.com personal loans is understanding the credit requirements. Lenders on the platform may have different credit score requirements, and borrowers with excellent credit may qualify for lower interest rates and more favorable terms. Credit scores are typically categorized into several ranges, with excellent credit scores being 720 or higher, good credit scores ranging from 660 to 719, and fair credit scores ranging from 620 to 659. To get the best loan offer on Credit.com, it is recommended to check credit scores beforehand and work on improving them if necessary. Borrowers should also carefully review the loan agreement and ask questions if they are unsure about any terms. Additionally, it is crucial to only borrow what is necessary and to have a plan for repaying the loan to avoid accumulating debt. In conclusion, interpreting Credit.com personal loans involves understanding the loan terms, comparing APRs, and meeting the credit requirements. By following these steps and best practices, borrowers can make informed decisions and find the most suitable loan for their needs.